Good afternoon, ladies and gentlemen, and welcome to the Wapic Insurance PLC Q1 2018 Investors and Analyst Conference Call. My name is Bode Ojeni, Executive Director of Sales and Distribution, and I'm being joined today by Mrs. Yinka Adekoya, Managing Director of Wapic Insurance PLC, Mr. Adedayo Arawujolu, Managing Director of Wapic Insurance Ghana Limited, Mr. Olufemi Obaleke, Executive Director of Subsidiaries, Mr. Peter Ehime, Chief Risk Officer and Executive Director, Technical Division, Wapic Insurance PLC, Mr. Adewale Koko, the Acting Managing Director, Wapic Life Assurance Limited, and also the Executive Director, Technical Division for Wapic Life Assurance Limited, Mr. Oluseyi Taiwo, the Chief Finance Officer of the company, Mr. Olushola Ojeniyi, the Chief Investment Officer, Ms. Zina Giwamu, the Head Digital and Technology Division, and Ms. Toyin Aziz, the Head of our Strategy and Investor Relations. For your information, the Q1 results being presented at this session was published last 2 weeks in the national dailies. During this call, we will discuss our business outlook and might make forward-looking statements. These statements and comments are based on our expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties. Before we jump into the presentation, just a few housekeeping matters. We are streaming live, and as such, the presentation is shared on your desktop and laptop. At this time, we would advise participation to be on listen-only mode. I would therefore request that you be kind to mute your microphone so that you can hear us clearly, and such that background noise does not interfere with the audio. At such a time as the presentation is concluded, we have left ample time in the agenda for questions. Instructions for participation in the Q&A will follow at that time. We will also take questions that come in via the chat feature on WebEx. During the Q&A session, please limit yourself to one question and possibly one follow-up question. We will attempt to moderate the questions as seamlessly as possible. As a reminder, this conference is being recorded. Moving on to the next slide, which speaks to the outline of the presentation. We'll be giving a brief highlight about the company and the group operations, our operational environment, the regulatory environment, to the financial overview, and the outlook, how we see the rest of the year. I'll be taking us through the first three sessions, which speaks to the company, the operating environment, and the regulatory environment. While Mr. Oluseyi Taiwo, the CFO, will come on to take us through the financial overview. Then I'll be back to do the outlook as we see it. Thank you. Slide 4 speaks to the overview of Wapic Insurance Group. Wapic Insurance PLC operates through three entities. Wapic Insurance PLC, which deals in the general business and currently serves as a holding company for the group. It's quoted on the Nigerian Stock Exchange and has two subsidiaries, Wapic Life Assurance Limited and Wapic Insurance Ghana Limited, both subsidiaries being wholly owned by Wapic Insurance PLC. We also have an associated company, Coronation Merchant Bank Limited. We are listed on the Nigerian Stock Exchange, and we also have a GDR depository bank with the Bank of New York, Mellon. Market capitalization is 7 billion naira. We are rated by AM Best, and our current rating is C++ for financial strength rating and B+ for usual credit rating. We have shareholders in excess of 850,000, and we have 13.4 billion ordinary shares in issue, each of 50 kobo each. Total portfolio is 28 billion naira, while our total asset under management is 19 billion naira. Our total staff strength is 206, made up of professional staff. Our reinsurers are Munich Re, African Re, Waka Re, Continental Re, Nigerian Re, and Ghana Re. Our actuaries are Ernst & Young and QED. All our auditors are PwC. The next slide, that's slide 5, speaks to the operating environment, and I'll be speaking to this under 4 headers: FX rate, GDP growth, crude oil, and inflation. On the FX side, average Naira exchange rate has been reasonably stable within the last 4 months. The current exchange rate regime in the country, which is broadly managed by the central bank, suggests that the outlook of the Naira-dollar exchange will remain tied to the CBN intervention rates. Inflation remained at the lowest level since March 2016 at 13.34%, easing from 15.37% recorded in the previous quarter, and below the market agreed consensus of about 14.5% rise. This is the lowest inflation rate in the last 23 months, mainly due to a slowdown in the price of food, housing, and utilities. On the crude oil side, Nigeria's Bonny Light oil price advanced to a 28-month high at $65.9 to the barrel on the back of voluntary production adjustments. The oil sector remains the key source of export earnings for the Nigerian government and is estimated to account for about 96% of Nigeria's export revenues, 48% of government income, and 10% of Nigeria's GDP in Q1 2018. On the GDP side, the GDP growth of 1.9% year-on-year was recorded in the last quarter of 2017, and it was seen as a sure footing for achieving the growth projection of 2.92 in Q1 2018. The nation's GDP maintains its positive growth since the emergence of the country from the technical recession at the end of Q2 in 2017. Moving on to slide 6. I'll be sticking to the regulatory and industry environment. The National Insurance Commission, NICOM, has suspended the issuance of compulsory license to any interested insurance investor. The regulator says it's inappropriate to operate a composite company. According to the Commissioner for Insurance, a company will be allowed to float either a life or a general insurance company, and that any operator willing to do both will have them as different entities, instead of a composite license that allowed an operator to do both using one license. The Nigerian Stock Exchange launched a corporate governance index which will track the performance of pre-qualified companies using their market capitalization, free float, and corporate governance rating scores. The index is expected to be an important tool for investors keen on investing in well-governed companies as well as corporates eager to distinguish themselves on the ground of governance. It may interest you to know that Wapic Insurance PLC already got its CGRS rating in 2017, and all the directors of the company. Ladies and gentlemen, kindly put your system on mute. Thank you. The Nigerian Stock Exchange introduced a new pricing methodology and par value rule, which became effective in January. The new par value rule specifies that the price of every share listed on the Nigerian Stock Exchange shall be determined by the market forces, and equities may now trade below the erstwhile price floor of 50 kobo per unit. The rules also classify equity securities into different price groups in order to achieve the pricing methodology. NICOM, in partnership with the Nigerian Incentive-Based Risk Sharing System for Agricultural Lending, NISRA, has revealed plans to protect farmers from every foreseeable risk involving rainfall and crop yield in their various farming operations in Nigeria. The scheme, which is tagged Index-Based Agri Insurance, will pay out benefits on the basis of a predetermined index for loss of assets and investments, primary working capital resulting from weather and catastrophic events, without requiring the traditional insurance services. I'll now hand you over to Mr. Sheyi Taiwo, the Chief Financial Officer, who will take us through the financial highlights for the quarter. Thank you very much.
Good afternoon. I will be taking us through the financial overview, looking at the financial highlights, income statement review, statement of financial position review, and assets under management. The next slide, slide 8, looks at the group financial highlights. Total income for Wapic Insurance PLC grew by 15% quarter on quarter, while our gross written premium grew by 18%. Total underwriting profit grew by 81% within the period, while we had a 17% decline on our profit before tax. Our net claims ratio declined by 14%, closing at 44% for Q1 2018. At the financial position side, our total assets grew by 10%, while we had a 69% growth on our insurance assets. Our total assets grew by 17%, while our shareholders' funds remained relatively flat with a 2% growth quarter on quarter. The next slide, slide 10, looks at the income statement review. Our gross written premium increased to 4.5 billion at the end of the financial quarter, and 18% growth from 3.8 billion achieved in the prior period. Reinsurance expense grew slightly by 9% to 958 million as at the end of Q1 2018, from 879 million in Q1 2017. This is largely driven by the increase in facultative reinsurance to balance our exposure on specific risks, particularly in our general accident and oil and gas, oil and energy portfolios. Our underwriting expense decreased by 12% quarter on quarter to close at 312 million at the end of Q1 2018. We had a laudable growth in our underwriting profits, as we had an 81% growth to close at 733 million compared to 426 million we closed with at the end of Q1 2017. Investment and other operating income went down by 21% and 27% respectively to close at 330 million and 52 million. Our operating expenses, inclusive of our personnel costs and other accruals grew by 29% for the period. Slide 11 looks at our product performance. Our oil and energy and engineering business were the top performing products portfolio within the quarter, growing by 21% and 20% respectively. This was followed closely by our life portfolio, which closed at 19% for the period. General accident as well as oil and energy were the group's most profitable products, leading with a 59% and 48% individual contribution to the total underwriting profit for the group. Our underwriting profit margins ratios were positive for all product portfolios except the slight decline we experienced within our motor and fire portfolio, owing to the increased claims experience for those products within the period. Our group expenses. Net claims expenses for the period continued to be stable as we had a mild 6% year-on-year growth on our total net claims expense compared to same period 2017. The 23% increase in net premium income further pushing the effect of our net claims ratio, which dropped by 14% from the preceding year's ratio to 44% at the end of Q1 2018. The drive for improved efficiency paid off as underwriting expense declined to 312 million from 353 million recorded in the same period 2017. The positive growth in our top-line performance for the period, coupled with better quality efficiency, pushed underwriting expense ratio down to 19% from 24% in the preceding year. Staff cost and other operating expense grew to 811 million and 336 million for the period due to the expanding operations to drive up our top-line performance. Operating expense margin ratio closed at 26%, a slight decrease from the 23% recorded in the prior period. The cushion effect is mainly driven by the improved GWP performance. Our insurance expense grew to 2.5 billion and 18% year-on-year growth from 2.1 billion in the corresponding period 2017. We have continued to optimize our insurance process to adequately manage our underwriting expense. Benefits we expect to crystallize within the year 2018. Wapic's total income grew by 15% year-on-year to close at 5.1 billion for the first quarter ended 2018, compared to 4.4 billion same period 2017. The group's growth trajectory recorded a 11% 4-year cumulative annual growth rate. Our large corporate business contributed the largest chunk to the premium at 62%, followed by a financial institution group at 15%. Our Ghanaian subsidiary contributed 11% to the group's total GWP for the period. The company's effective awareness drive continues to pay off, evidenced by the increased shares of market in the Ghana space. Wapic has continued to reposition its retail group to ensure the successful implementation of the reinventing retail market strategy. Our underwriting profit recorded a solid growth of 81% from Q1 2017 to close at 733 million for the period. Underwriting profit margin followed the same upward curve, closing at 17% for Q1 2018. There was a reduction in our profit before tax position for the period, relatively due to the increase in operating expenses and the decrease in our investment income for the period. We closed the period with positive return on assets and return on equity. A review of our statement of financial position. As we continue to see the need for portfolio realignment to take advantage of higher yielding assets, this led to the 48% drop in cash and cash equivalent for the period. This could be traced to the growth in our financial assets, showing a switch from cash and cash equivalents to benefit from elevated yield in financial securities. The equity value of our investment in associates grew slightly by 4% year-on-year to close at 8.6 billion, driven by the share of profits earned during the period. The increase in the valuation of the company's investment properties for the year led to the 1% growth. We expect to continue to experience depletion in this asset class as we continue to reorganize and divest from this class of assets to other high-yield assets. Insurance and investment contract liabilities grew by 35% and 6% respectively for the period, following the growth in our pure risk portfolio and also our investment-linked obligations during the period. Total equity for the period closed at 18 billion, representing a 2% growth from the position we closed with same period 2017. The total ratio of our earning assets to total assets stood at 64% at the end of Q1 2018, reducing slightly to 14% from the 73% position recorded at the end of the financial year 2017. The group's total asset position grew by 17% to 33.4 billion at the end of Q1 2017, compared to 28.6 billion recorded at the end of the financial year. Total liabilities grew by 42% to 15 billion in the period under review, as against the position of 10.6 billion we closed with at the full year 2017, largely driven by the growth in our insurance and investment contract liabilities recorded for the period. Shareholders' fund remained relatively flat at 18.3 billion at the end of Q1 2018. A review of our assets under management. The group investment portfolio composition remained highly allocated to fundamentally strong associates and subsidiaries, as well as fixed income securities with high yield. The investment property portfolio remained relatively flat, with slight bump owing to property revaluation. The organization continues to maintain a strategy to fully exit the underperforming legacy properties. Additional placements in unquoted investments were necessary to take advantage of uptick in yields. Improvements in the capital market impacted the growth in the value of our quoted investment securities for the period. I will be handing over back to Bode to continue with the presentation.
Shay. I'll now be taking us through the outlook for the rest of the year. And I'll be speaking to these under four headers: the financial, the operational, sales, and people. On the financial side, as the company will continue to proactively drive for a solid solvency margin as we await the likely regulatory change in capital adequacy rules. We expect continued growth in our premium performance in line with our strategic year-on-year growth expectations. And we'll also continue to maintain a focus on cost optimization and efficiency initiatives throughout the business in order to meet our strict target cost-to-income ratio. On our operations, we have transformed our corporate website to a world-class e-business platform, and customer experience touchpoints to enable sales and enhance customer engagement. We are set to launch a self-service omni-channel platform for customers to conveniently connect with the organization. This will deliver growth in premium, increased customer satisfaction index, as well as improved service delivery and internal efficiencies. We have established a digital division, which is expected to drive the group's digital strategy, including digital marketing, channels management, and data analytics and intelligence. On the sales side, we expect a further deepening of our retail insurance penetration countrywide as we grow our customer base. We would optimize the Wapic Life offerings with the launch of new products such as annuity, funeral insurance, and other customer-driven products. We have rolled out plans for a full implementation of a bank assurance model in all major state capitals across the country, in line with the growth opportunities as we see them. On our people, we are committed to being a great place to work. We remain focused on a performance-driven organization with significant improvements in employee engagement initiatives anchored by staff and for our staff. As a foundation to our strategic drive for the best talent in the industry, our investment in talent development are expected to continue to manifest in productivity gains. We are inculcating the behaviors, culture, and innovations associated with leading customer experience providers. This brings us to the end of the presentation. Thank you everyone for listening in. The floor is now open for questions and answers. Should you wish to ask a question at this point, please unmute your phone or computer at this time and speak. We would like to ask that you indicate your name and company as you ask questions. Thank you very much.
Good afternoon. Good afternoon, am I on? Good afternoon. Good afternoon.
Hello, good afternoon.
Okay.
Mr. Wale Lucy, could you please speak up a bit? I could hardly hear you.
I said my name is Wale Lucy. I'm calling you from here. Okay. So basically, thanks for the presentation. My question is around the investment income. It looks like that's
I'm sorry, Mr. Lucy, we could hardly take what you're saying from this end. Maybe you want to call it again.
Okay, what about now?
Yeah, it's better now, much better. Thank you very much.
Okay, thank you. Okay, thanks for the presentation again. I was saying that my question is around the investment income bit of the presentation, which seems like the only pressure where most of the decline in PBT and operating profit is coming from. I'm wondering, it looks like the equity space is going to be calm, and obviously that decline is probably due to the lower yield going into 2018. I'm wondering if you are looking at other asset class going forward to boost return from that end. Then I also like an idea into what is responsible for the slight uptick in claims for the period. Thank you.
Thank you very much. I would ask that Mr. Sheitai with the CFO respond to the first question regarding the investment income as well as the claims. Thank you, Shei.
Good afternoon. For the Investment income, just as you said, based on the what we are seeing within the financial money market right now, there are declines in yields. What we are doing as an organization is to look for other investment opportunities with higher yields to be able to make appropriate compensation for the decline we're experiencing in the yields in the fixed income securities market and also the money market. So we would continue to look at the market. We have actually said that in our presentation also, that that's something we continue to do within the period. And we expect that before the end of the year, we'll be able to speak to better returns on our investment income. On the claims, for claims, what we have experienced also is the fact that the impact of the foreign currency the impact of the increase in foreign currency is impacting the portfolio of claims as cost of repairs on the high side. We have not totally experienced the adjustment price-wise on the premium side for the premium generation. So we expect that as we go into the year, we continue to balance that out.
Okay, thank you.
You're welcome.
Good afternoon.
Good afternoon.
My name is Amaite Ramasale from Asset Invest.
Yes, please go ahead.
I would like to ask about the gross premium rating. I noticed that in the quarter there was an increase in contribution by your fire insurance products. So I'd love you to shed more light on that. I also want you to give some kind of like projections concerning your bancassurance line of business. How do you think this particular line would grow in the year? Secondly, I'd like to comment that your Q1 2018 results was very, very would I say, explicit on the word, for lack of a better word, was broken down properly and was very understandable. Thank you.
Thank you very much, Omafe. I would request that the Managing Director of Wapic Insurance PLC responds to your questions.
Good afternoon, Omafe. Thanks for your comment. The increase witnessed in our GWP for the quarter was a result of efforts that we have made over the years in ensuring that we get in more business during the year in, year on. And incidentally, there are major projects in the market now that insurance was picked as the lead underwriter. So this boosted our income for the quarter. And we are still expecting more in the course of the year. Thank you. Okay. The second question is on projection for back insurance. Well, since it is relatively new, we are being careful in making lots of promises on back insurance. We are watching things as they go along. We just obtained our regulatory approval from NICOM and the CBN. So we're about starting off now. So for now, we are not going to be. We are doing it in partnership with Access Bank, which is our focus for now, and we will be careful in making much projection on it for the time being. But we are sure that as the year goes by, we'll be able to do more in back assurance, even also the corporate business that we are doing currently. Thank you.
Hello?
Hello?
Yes, I would like to ask a question. My name is Ahovi Ponu. I'm calling from Coronation Capital. My question is more just to get more color on the regulatory framework and some of the recent changes. I've been aware, I guess, recently that NICOM has promulgated standards for minimum pricing on, I believe it's compulsory types of insurance. I believe that's a near-term reform. But longer term, the issue of risk-based supervision and what your sense is of NICOM's timing for when that may be implemented. It would be good to get color from the management team on these two regulatory reforms. And for the first one in particular, are you seeing it have an impact in the market as yet?
Thank you very much, Mr. Ponu. On the first question relating to NICOM's pronouncements on compulsory insurances, and this is with particular reference to group life pricing, which has been pegged at a minimum of 6%. This is one of the things that we've been clamoring for in the industry with respect to appropriate pricing of our products. And we're beginning to see this play out in the revenue potentials of our life business. The other one that we're expected to come on anytime from now is also the minimum price for motor third party. Today, you find situations where, as against the minimum price that has been set of 5,000, once to play with, expect that revenue generation potential for most companies will be provided to create a level playing ground for everybody. And then you have to start competing on pricing and on the which is supervision. At this time, we are unable to put in place. What we know is that NICOM is putting structures in place to ensure, one, that they have sufficient capacity in-house to implement risk-based supervision that has been on the table for the past 2 years, and two, to be able to also supervise and monitor the industry to ensure compliance and effectiveness. But we anticipate that anytime from now there will be pronouncements made with respect to minimum capitalization for the industry. And this, we believe, will be the start of full implementation of the risk-based supervision framework. I hope that answers.
Yes, thank you very much. Hello?
Ladies and gentlemen, if there are no further questions, we'll just like to say thank you for your participation at this Q1 2018 Analyst Conference. We thank you for your interest in Wapic, and we'll look forward to having you on board again when we have the one for Q2. Thank you very much, and do have a lovely day. Thank you, and bye-bye.
You too. Have a lovely day.